Yeah, go Nick.
Okay, so in specialist costing, we have five techniques. We have ABC, target, uh, throughput, life cycle, and environmental. So environmental accounting, unfortunately, people ignore it most of it because it's theory. But in the exam, there have been several questions on environmental accounting. Okay, so let's look at the definition of environmental management accounting. Okay, so what happens in an organization is that apart from producing reports on how you have performed in your business, you should also look at the impact your organization has on the environment. You can be dumping wastes in rivers, or you might pollute the air in several ways. Now, in environmental accounting, what we are going to be doing specifically is to address such challenges. So we make sure we identify the environmental costs that we have or impacts that we have on the environment. Then we collect that information. Then we have to analyze it. And then we should look at both monetary as well as physical information. So physical information can be maybe we have decided to cut down trees. Monetary, maybe we have been sued. Right? So you look at both physical and monetary information so that we see how we have performed both internally as well as externally. But here we'll be interested in internal decision making. So to define environmental accounting, we'll define it as a system of identifying, correcting, analyzing, and using both physical and monetary information related to organizations, environmental performance for internal decision making. So that's how we define management accounting. Previously, it was compulsory that every organization should recognize environmental costs, and it is still now up to date. But when we are dealing with environmental management as organizations, we should now recognize that environmental awareness and management are not optional. They should always be exercised. They are now compulsory, just as they used to be. If we do this, we ensure we survive in the long term as well as being profitable. So that's the emphasis of environmental accounting. So why do we study environmental costs? People can see it as useless. We are spending money looking at how we impact the environment, producing reports. But there are two authors who helped us to recognize the importance of environmental accounting. So it's Bennett and James in 1998. So these guys said that companies should have concern for the environment because the environment can impact you in several ways. For example, they said if you save savings within the short term, you can save savings through the short term if you are able to minimize waste and if you are able to engage yourself in energy efficiency systems or energy efficiency schemes. So try to minimize waste and also make sure that they are efficient. For instance, we are now encouraging people to use solar instead of electricity, or encouraging people to use wind energy rather than charcoal, or we're encouraging people to use gas instead of charcoal. That's what Bennett said. Bennett also said that, or he also noted that companies which have poor environmental performance are likely to face increased cost of capital. Why do they say so? It's because investors and lenders will demand a higher risk premium. In financial management, we say this premium is what you expect on the market and what is the normal risk that you have. So these people are trying to say, if you don't take care of the environment, the investors will demand a high risk of capital. Why? You'll be sued. There's a chance that if you don't take care of the environment, you might be sued. If you are sued, you should expect the shareholders to demand a higher risk, because they know that their company might be sued one day, so they'll demand a higher risk. They'll demand a higher amount of dividends. The also factor, we can say the also important factor that Bennett and James noted was that in the environment there are some pressure groups. In Malawi we have forestry people, but we also have pressure groups, people who try to make sure that they are compliant with environmental needs. So there are several pressure group campaigns that can cause damage to your organization as well as additional costs. So make sure you take care of the environment. If you don't, pressure groups can damage your organization.
Ngati MEPA.
Ngadija?
They call it MEPA.
Yes. It's very crucial. It's a very crucial organization which can damage your reputation. And they don't care whether you're employing people or not. They will still damage your organization's reputation if you're not compliant with the environment. Okay, then Bennett and James also noted that when you're trying to process inputs, which later on becomes a waste, it accounts for almost 5 to 10% of organization's revenue. In simple terms, accounting for waste can cost you even 5 to 10% of expenses. Some organizations, just to get rid of waste, they spend a lot of money. They have to pay maybe ACCA council to do that for them. That is what we mean by the expensive. So environmental costs are very expensive. So because they are very expensive, we have to make sure that we abide. Unfortunately, lucky enough in Malawi, the city council maybe cannot charge you any service for the waste. But in other countries, because this is an international subject, when you have waste, you pay a lot of money to the authorities. Okay. So Bennett and James are very important authors in environmental management. So they suggested several ways on how we can achieve environmental business and the benefits. We should be profitable in our business. At the same time, we should be able to manage the environment. So James said there are several ways. So we'll just note a few which are very important. We cannot write everything here. So they said the first thing is we should integrate the environment into capital expenditure decisions. What we mean? In organization, we have a budget. Whenever you're preparing a capital expenditure budget as an accountant or as a finance manager, you should also incorporate environmental benefits to say we are buying maybe motor vehicles. We are also buying maybe gas cooker, for example. If you are buying a gas cooker, it means you are protecting the environment. So whenever you are making a decision, make sure you also incorporate environmental related equipment in your capital expenditure. You should also understand and manage environmental costs. You need to understand. So when you're working, any organization you're working for, you should be able to understand, is there any impact that will cause on the environment? Maybe someone is trying to join. Welcome, Shaupi.
You.
Bwana, phone inazima, tunawimbia.
Oh, it was on. Kama unataka benali busy. Guy wangu nali kuchurch. Then kona kama sina yes do not disturb. It was on. Una ile job.
Of course. Alright, I think this is the third slide. To introduce environmental management.
Okay,
yeah. Okay, so we are on how businesses can achieve business environmental benefits. So environmental accounting, just to give you an overview, is a system of accounting where we make sure that we collect and analyze all environmental costs so that we are beneficial to the society as well as to the business. So to achieve these environmental costs, environmental management accounting and reduce environmental costs. There's Bennett and James who said there are several ways on how you can manage. The first was to integrate the environment with capital expenditure decisions. The second was we should understand and manage environmental costs. So we're on the third, where we should introduce waste minimization schemes. So let's find out ways on how we can minimize waste. Some companies, I don't know where I work for, they said we should not use stationery anymore. Let's use soft copies. So let's avoid printing out. Let's send invoices, let's send them electronically. That's the first way of reducing environmental costs. Then others can say whoever pollutes the environment in whatever way, maybe thrown any item in water or you're smoking, those are not. Some companies will say smoking is discouraged. Why? They are trying to contribute to environmental management. Also, understanding and managing life cycle costs. You need to understand the whole life of the product. Start from when you introduce that product to the end. Because when you understand the life cycle, you'll be able to take note of the environmental costs which you can incur within the life cycle. If you're developing a product, what should you expect? Maybe you're developing soap. You should expect some of the chemicals to spill in water, for instance. So at every stage, you can encounter several environmental costs. So you have to understand the life cycle. And then you should also measure environmental performance. For example, you can look at how many trees have we planted this year. That's a measure environmental performance. Or what is the reduction in carbon emissions? Maybe we have reduced carbon emissions by 20%. That's measuring environmental performance. And also involving management accountants in strategic approach to environmental related management accounting and performance evaluation. In simple terms, if you are working as a management accountant, you're able to do that. My last job was management accountant, so I was able to do this. I will make sure that when I'm producing my management accounts, I should include at least costs which could affect the environment. Even though I was working for a college as a management accountant, but still more we have to incorporate. So issues of stationery, all those things have to be discussed. It's a requirement that now in accounting we should have a green accounting team, but we can't manage here in Malawi. We should be honest. We can't manage to have a green accounting team, but in other organizations they'll have a green accounting team. The accountants who make sure that all management accounting information is being recorded or is being taken note of or is being analyzed. So the green accounting team mainly has one responsibility, and their main responsibility is to analyze the strategic picture and identify opportunities for practical initiatives. What do we mean? So look at the picture, which environmental costs are affecting us, and also look at the benefits that you get if you are environmental friendly. Now it means if you are, I think in Malawi they started an initiative later on to say if you plant trees and you don't cut them, you'll be rewarded a certain amount of money. So as an organization, we should look at opportunities that we will get if we're able to engage ourselves in management accounting or in environmental management. A good example in Malawi can have water board. I think water board takes lots of initiatives, maybe planting trees, something like that. All these are responsibility of the green accounting team. So try to negotiate with other companies to support in protecting the environment. That's what it should do. Alright, so this green management team, what it will do is it should analyze the short and medium term impact of changes so look at what will be the impact of changes in government policies such as transport. For instance, the government says from now on we'll be using a train. Look at what the train might cause on the environment. Legislation and regulations, so what legislations are in place. Supply conditions such as fewer landfill sites. For example, remember in Blantyre we have Kanjiza forest. That's where people used to dump sites. Then market conditions such as changing customer views. So what are the customers saying about the environment? All these things should be considered by the green accounting team.